Good morning to you. If you do not remember me, I am LMP, the best in both the East and the West, the North and South, or the four directions. As we said in the last lecture, the average method is used when the goods are indistinguishable and therefore measured at an average cost incurred. Today, we will talk about the weighted average method. This method is used under the periodic inventory accounting system. The average cost per unit is determined only at the end of the period.
You are unforgettable, LMP, by how you chose your clothes, and how your voice is getting out from your throat. My question is, what is required to be determined when using the weighted average method?
The weighted average per unit is used to determine 1. The ending inventory and 2. The cost of goods sold and consequently, the operating income and the net earnings.
Is there any equation to calculate the weighted average cost per unit?
Yes, the cost per unit is calculated using the following equation. The sum of the cost of the beginning inventory plus the cost of purchases during the period. This sum is the denominator in this equation, divided by the sum of the number of units in beginning inventory plus the number of units purchased during the period. This sum is the denominator in this equation, or the cost of goods available for sale during the period divided by the number of units available for sale during the period.
Could you please give us an example of how the weighted average method works?
The example is the following data related to FESAA we Abdel Fattah Company, Year 1 activities for certain inventory item. Beginning balance is 100 units at a cost of $20 each. On March 1st, a purchase of 20 units took place at a cost of $32 each. On April 1st, a sale of 70 units took place with a selling price of $40 each. On June 1st, another purchase of 30 units took place at a cost of $14 each. On October 1st, another sale of 40 units took place with a selling price of $24. You are required to calculate 1. The year-end inventory, 2. Year 1 cost of goods sold, and 3. The gross profit.
Because the topic is new to us, we would appreciate to hear the answer from you.
Okay, let's apply the equation mentioned above in order to calculate the weighted average cost per unit. 1. The cost of goods available for sale is composed of $2,000 of the beginning balance plus cost of the purchase on March 1st of $640, 20 units multiplied by $32 each, plus cost of the purchase on June 1st of $420, 30 units multiplied by $14 each. Thus, total cost of goods available for sale is $3,060, $2,000 plus $640 plus $420. 2. The units of goods available for sale is composed of 100 units in the beginning inventory plus 20 units purchased on March 1st, plus 30 units purchased on June 1st. Thus, the units of goods available for sale are 150 units, 100 plus 20 plus 30. 3. Dividing the product of 1 above over the product of 2 above results in the weighted average per unit of $20.40 or $3,060 divided by 150 units.
I think we can now calculate both the year-end inventory and year 1 cost of goods sold after the weighted average cost per unit became known.
Absolutely yes, but we need first to calculate the number of units in the ending inventory. This is composed of 100 units of beginning inventory plus 20 units purchased on March 1st plus 30 units purchased on June 1st minus 70 units sold on April 1st minus 40 units sold on October 1st. Thus, number of units in ending inventory is 40 units. Accordingly, the ending inventory is $816, being 40 units multiplied by the weighted average cost per unit of $20.40.
How does the cost of goods cost calculated?
It is easy and depends on the results of calculations arrived at above. Simply, the cost of goods sold equals the cost of goods available for sale of $3,060 minus the ending inventory of $816. Thus, cost of goods sold is $2,244, $3,060 minus $816, or number of goods available for sale of 150 units minus number of units in ending inventory of 40 units. Multiplied by the weighted average cost per unit. 150 minus 40 equals 110 units sold. 110 units sold multiplied by the VICFU of $20.40 equals $2,244.
In order for the 3 questions to be fully answered, we need to know how the gross profit is calculated.
In order to calculate the gross profit, we need first to calculate the dollar sales amount. During the year, 2 sale transactions took place. The 70 units sold on April at a selling price of $40 or a total of $2,800, and the 40 units sold on October 1st at a selling price of $24 or a total of $960. Thus, total sales is $3,760, $2,800 plus $960. The gross profit equals sales minus the cost of goods sold. Since the cost of goods sold is $2,244 as previously calculated, gross profit must be $1,516 or $3,760 minus $2,244.
Thank you, Yalempi, and we wish to see you in the near future.